Ladies and gentlemen of the crypto space, we're live on a Monday, February 12th at 11:30 a.m. Frankly, I was a bit tired this morning, but I like to remind myself that the stream is so easy because all I get to do is rant and rave about how insane the vast majority of stories are, the vast majority of perspectives are, the way folks interact with these markets. And it's just so much simpler than everyone tries to make it out to be. So I might have been tired, but I get to vent and rant and rave for a good 30 minutes about how everyone is a sideliner. I mean, literally, do folks not remember 16 and 17 and 20 and 21? The timeline was a buzz. It was crazy. It was frantic. It was wild. At these numbers, do you have any idea how crazy it was back in 21 when we were at 50K? The market was insane. And right now, the market is literally dead quiet. You could drop a pin, and it's literally just the folks that know about the systems being built. It's the people that are involved, and it's just very technical or very, the main characters. I think that's a decent way to describe it. Those are the folks that are presenting their content on social media. It's not the froth. There is no froth whatsoever. I mean, is everyone sidelined? It's crazy. It really is. Let's pop it over to the main screen and take a look at what everyone is looking at today. I mean, it's literally everyone. The world is looking at this chart. It's not just us on this stream. These are real lines on a chart. And that thing, 49,788. These ETFs are sucking up incredible amount of supply. So what's my interpretation? All right, Bitcoin is a type of money. We've been talking about this topic for years. What are the percentages you're looking for considering expectations? 1x, 2x, 3x? All right, you got 10, 20, 30 mil. You can turn it into 100 mil, and that's all you need is a Bitcoin. So this is why portfolio size is so important to respect. And, as much as I often talk about not wanting to outperform as much, to be more reasonable and set reasonable expectations, to me, even those lower multiples are the most reasonable of expectations, which is why I've been talking for all these years about how I compose the portfolio and label, categorize, compartmentalize the portfolio with Bitcoin as a type of cash. Great. But, I mean, even someone that has those large numbers wants to own businesses. They don't just sit in cash. And then so you own enterprise, cash flow positive enterprise. And I don't need to rehash the same old story every single week, which is basically what we do more or less. But, we've been talking about this type of market for years. This type of underappreciated, absolutely impressive potential market where there's systems that are dealing with money and credit and foreign exchange and derivatives of all the fanciest of things. And at some point, it would be appreciated. So it comes down to just owning things and not renting. You want to rent too. It's being on the right side of rent. How about that? That's one of my most interesting statements I've made over the years. So 49,682. Let's zoom in a little bit. Let's look at the technicals, see where we are in the MAs. I mean, it's been clearly riding like a weekly time weighted average price. Didn't even regress to the time weighted average prices. Just bounced off of the 10 SMA on the weekly. I mean, he's very much a premium on the monthly. So you could go out to the daily, but that's what happens in a bull market. If you looked up the RSI, it's probably pinned to the top on the shorter time frames, and that's what happens. It just keeps on running. And this certainly wasn't a double top at this point. We've already breached through to a fresh higher high. We are diverging from the MAs on the daily and the monthly, but on the 4-hour, you could see it was basically a time-weighted average price, 10 SMA mean regression. Daily, you have some room to regress, but check back in 4, 8, 12 hours. A couple of multiples of the 4-hour, a couple of candles on the 4-hour time frame, and you'll see where things head. But these are relatively small moves, and that's what folks need to appreciate with while respecting the portfolio size. It's 2.78%. These are modest moves. Now, obviously, this is why a lot of folks use leverage in a very liquid market like Bitcoin and Ethereum. You can get away with turning that 22% into 20% in a couple hours. And that is something that so many folks love to do. It's just something that we don't talk about because we don't do that. We want to own rather than rent and not speculate. So you know the assets we talk about, but it's good to see this type of appreciation for what is important within the overall narrative of things emerging, which is money and how the monies compare, how different types of monies are useful for different types of things, how different types of monies need to be considered and respected and treated from an FX management responsibility. This is not Bitcoin is not something to just sit back and collect. It's something to appreciate because there is cyclicality, and Bitcoin certainly does respect the power of the U.S. Treasury market, the U.S. dollar, and that cyclicality comes at it very hard. It's very important to appreciate the FX responsibilities of holding Bitcoin and, frankly, Ethereum at this point, which is still relatively small, but it's responding accordingly. It's not one-to-one proportional, and it's not outperforming yet. Should outperform, but even if it doesn't outperform, it's still a macro cap asset in the crypto landscape. So it does have the closest characteristics of a money as compared to Bitcoin, relatively speaking. These are all important considerations. Our performance curve up to 51 cents, very good to see. Stack still holding on to a fair amount of exuberance, 10%. That's crazy on STX. Good to see, though. Let's see where our friendly airdrops are. TIA 1.31 on the day. Dimension holding strong above 7, which is very interesting. That was a very healthy airdrop. Say at a 575 on the daily. Let's see what Phantom's doing. Phantom, look at the technicals on this thing. Breakout, resistance flip support, and he got a 50, 100 passing through the 200 on the 4-hour, relatively short term. Let's zoom out rather. And all of it was a breakout above the time-weighted average price on the weekly, failure to breach the 100 SMA to the upside, retest to the time-weighted average price, a bit of a wick through the 50 SMA. Let's go to the monthly. Oh, even clearer on the monthlies with that breakout, retest, support, expression of support. And now you just need the higher high for the trifecta of bullish confluence. Complexity with the volatility in crypto markets is to get that higher high. You're talking about a 40, 50% rip, 70%. Plus 30, yeah. So almost a 40, 50% rip to the upside. So that's not. I wouldn't. I don't. 30%, pay a 30% premium to wait for technical confluence. I think that is a worthwhile premium to always pay. Tapsy's in the house. Good morning, Spike. 250K, God Candle enjoyers. That's pretty much what we got going on from a technical perspective. Don't be sidelined, but the problem is now that folks are seeing this price action, if you haven't been in these markets for years, you're not prepared to navigate these markets, which is what everyone that watches this stream is prepared to do. There should be no exuberance. You get excited, but that's separate and apart from your capacity to interact with the what we expect to be the volatility of these particular assets. We're prepared. We've seen this before. And we're owners instead of renters. The bad guy, morning Cap, how was your weekend? Pretty good. Not feeling so hot right now. A little tired this morning, all thrown off, a little foggy. But I got to rant and rave for 30 minutes to an hour. I'm not going to say no. Tapsy, haven't tested it yet on Paladin, but I saw VoteLock CVX delegation rewards will be distributed in CRV-USD. Yeah, that's pretty cool. As much as Curve has underperformed and narratives circulate to the extent that they do, it's irrelevant. Llama Lens crazy, CRV-USD is crazy, and why? Everything I talk about with regard to money, these are the craziest systems, and sovereign nations can't do anything like this. So if you put it in the context in which I do, with regard to how central banks manage their monetary policy and frankly how treasuries of countries manage their fiscal policy, I mean, that's literally the embodiment of what is so innovative about the Curve protocol, and now especially with the credit facility and its own in-house liability printing system, which is somewhat akin to a central bank. I mean, they can't just print collateral. They can't print treasury units. It has a deterministic fiscal policy, and that's why it's so unique. And the general public could be very critical of it because of its underperformance relative to other assets that are making significant percent moves. But you got to understand that percent moves aren't what people think they are. That's the hot ball of money, the rotation of capital, greed, and the chasing of outperformance, and literally just how capital flows from underperformance to outperformance, and what goes up causes it to go up more because it draws in capital. It's like a vacuum. It's like a siphon, a water siphon. It just sucks in capital. It's quite metaphorical. So just because something's underperforming doesn't mean. Yeah, bear in mind also, equally, if something's underperforming, it's very hard to distinguish, if not impossible, between invalidation. So that is something where you can argue that faith, somewhat of that concept, is applicable. But you shouldn't have faith, blind faith. Blind faith is dangerous. You need confluence. You need strength of a narrative, depth, robustness, criticality, an intellectual evaluation, historical comparison. And that's not blind faith. That's justified, substantiated, a reinforced belief, and that's meaningful. So that's generally my sentiment, which is why I just like, all right, good, this is great. This is all heading in the right direction. You see capital get drawn in by a significant outperformance of Bitcoin, and Bitcoin's a money. It's not an investment. And that Bitcoin appreciates to 75, 100, 150, whatever the hell it's going to. Folks do with it what they do with money. Money gets spent. Gains get spent. Appreciation gets spent. And what are they going to spend it on? And that's just the way all of this works. And you can, if you have a liquid portfolio, engage with the market as such. You let the outperformance of the money occur, and then the outperforming money gets redistributed and invested, and it all cycles downstream to things that can be purchased using these types of denominations, these denominations of currency units. Bitcoin, Ethereum, Solana. I mean, hell, even TIA and DYM, because all they are is gas tokens that have governance rights, some of them, but that's the whole point. It's literally just gas tokens. And even Bitcoin at this point is a type of gas token with what's going on its L2 networks. So money, gas token, governance, voting. Oh, man, this place is wild. This is nothing like the silly equities markets. I don't know. is what it is. This is what it's like to be early when you see something that the vast majority don't. The bad guy, what do you think about Dimension launch and token price? What is your strategy in regard to Dimension? Are you staking your airdrop? Yeah, it's good to see Dimension above 7. I got an Osmo airdrop years ago from Adam, and that has done well over the years. And now a Dimension. I wish I was a little bit more aggressive, as I've said with the teardrop. Did not claim that, but I got Dimension, and that's staked. Let it do what it's going to do, and that's okay. And sometimes I appreciate that the most about an airdrop. It's going to be what it's going to be, and I didn't have it before I got it. And just you could always argue that yes, you could capitalize on it, and I guess folks get drawn in by those narratives of some young kid getting like a $500,000 airdrop, and that just creates a frenzy of euphoria, and that's clearly not something that I am susceptible to. So my sentiment when I see an airdrop often, especially on the Cosmos hubs, is to just lock it. I'm going to get, what, 20, 30% on DYM, and wherever it settles, 10, 15%. All right, great. Let's see what happens when the entire market goes 100x on the money by 2030, and you're still getting 10, 15% of the money because of the nature of these assets. So you got an asset that goes 50x on the money, and you're still making 10, 15, 20%. Okay. So that's generally my sentiment. I have much more patience than the vast majority of folks engaging with the market. I have unlimited patience because I digest and appreciate what kind of multiples the overall market's going to do. And it's because you have to understand what kind of market it is. This isn't a U.S. market. This isn't a market of any sovereign nation. This is an emerging market. The only thing comparable would be to define it as a nation state and actually having, physical property in a country. But there is no country. There is no nation state. This is a market of all nation states, accessible to all nation states. There's only analogy, there's only comparison that's available to describe the subtleties of this market. There is no precedence. There is merely inspection and attempting to define what is happening, what is coming, what is emerging. And this is going to be 2030. You're going to get multiples of the entire market cap of everything. It's going to be crazy. I mean, it just, if you haven't seen 2020 and 2021, if you were not a participant, if you did not participate in 16 and 17, it gets gross. It gets like, it's hard to put it into words. You start to want to give away money. You literally, like, if you're that type of person, you start to want to like donate and give other people money because that's the type of market it becomes. It becomes disgusting. And you're like, how do you feel outperforming such multiples compared to an hourly waged employee or someone stuck in a 401k or someone having whatever in a Roth or an IRA and having barely any retirement savings? And then your portfolio is ripping 10, 15, 20, 30, 50x, 100x, 200x on the money in a matter of a year or two. And that's what this market has done over the last, easily since inception. But there wasn't really a market when Bitcoin was conceived. It's a very different market post-2020, Q4 2019 really. But even in 16 and 17, you had the concept of ICO, so it wasn't just Bitcoin and Ethereum, and it was, man, that was wild. Masternodes and just token explosion. So point being, gets gross. Gets really gross, ladies and gentlemen. Asarko's in the house. Much a pleasure. Raul, yes indeed. 34 people on the stream. 4 likes. Smack that thumbs up button on this day of Sidelineoors. trying to figure out. I'm not trying to figure out why folks are sidelined. I fully understand the psychology of it. The the discrepancy is folks are inspecting the real economy and how devastated everything is. The real economy is jobs and people getting fired and sales coming down and corporations making less money. It looks like shit. It looks horrible. But that is not the economy we're inspecting, and that's not the economy of what nation state we're inspecting, and we're not even inspecting the economy of a nation state. We're inspecting the economy of an emerging market that doesn't correspond to any particular nation state. That's the whole point. This is outside the scope, outside the borders of any nation state. So where do you think capital goes if a nation state is having issues? It goes to where the least risk is, to where the most trust is, to a place of refuge. And that's clearly what these markets are, what this emerging market is. So that presents very interesting things in the coming decade as nation states continually and increasingly falter with regard to their capacity to finance their sovereign debt burden, finance social civility, unfortunately, finance expatriation, offshoring of capital, outflows. Where's it going to go? Does it go to another nation state? Where's the opportunity? It goes to where the opportunity is greatest. That's why S&P and NASDAQ are doing what they're doing, because other nation states are faltering. So they crowd into the crowded trade. What's most interesting is that this isn't the crowded trade relative to meat space, but you do have the crowded trade within the crypto markets. So that just takes time. So when you're not in the crowded trade in crypto markets, you have to wait just a little bit more. And then that's where you get those extra multiples on top of the insane multiples that are well renowned for Bitcoin and Ethereum. And Solana, I mean, literally, Solana goes 10x from here to 1,000. That means it literally ran like 100x on the money for the cycle. That is a crazy multiple for a gas token. It's a gas token. That's crazy. So that'd be an interesting thing. I mean, it was literally down to less than $10. Oh my God. So these types of multiples don't exist in meat space at all. Stargate, can you get above the 60s? Can you break out with your V2 release? Just needs to get above the time weighted average price, but that's the same thing for everything. It's this coin hovering around the 10 SMA. I mean, look at these wild markets. These are the numbers that happen and that have yet to come. And it has happened obviously clearly multiple times. Look at 617 into 18. You're at less than a penny and you're running to $1. I mean, I don't even need to go back to here. It was 24,000% run for Ethereum back in 17. $1,000 turns into a lot of money. Wild. At 25.50, that's crazy. I remember buying Ethereum at $30. It's been a wild ride. Okay, Athletic Concept, hello. Much a pleasure. Guys, throw some commentary into the chat. If you have any questions, I'm happy to talk about anything. Otherwise, today is Sidelineooor's day with Bitcoin hovering around $50,000, Ethereum at 25.50. There is nothing to not appreciate about these markets. What's most important is to get a discount. To own these things at a discount, which means you're not going to get Bitcoin and Ethereum at a discount. And that's how literally, that's the siphon effect. Breaks to 55, everyone's like, I got to buy it now before it goes up higher. And that's how you get drawn in to a market that is appreciating. And that's literally why the market appreciates, because the vast majority of people are susceptible to that psychology. So, do we have any charts? Fold. I was looking at Fold. Lovely chart. I mean, it's just beginning. And it's just off the lows, less than 100%. So the interesting thing is when you're looking at these crazy crypto charts over the years, if you're off the lows like 100%, 150%, that's relatively marginal in crypto terms. So you could use those kinds of appreciation, those kinds of levels, to give you a little bit more confidence to take entry. This fold did not perform well in 20 and 21. Quite depreciative, up and then straight down. But there's some new narratives brewing, and a lot of my friends are very interested in it, and I myself am interested in it. But just because I'm interested in something doesn't mean I take a position. Can I attain the appropriate position size to do what I want to do? Will I be executing excess diversification? Is it suitable for my portfolio? And just because something looks great doesn't mean anything. So that's a heck of a green candle. That's probably all my boys doing that stuff. Looks really good. What else do I have up just for the fun of it? Or please pivot, or can we find the bottom? I mean, this got to be bottom there. 68 cents. Give me a break. Anyway. Okay. What's any advice you would give your younger self? Patience, time. Emotions are more of a burden than a benefit. Emotions are just a component of making a choice. You know, gut instinct, something that's exciting. Yeah, it could tell you where to look. But all these other rules that we've discussed over the years are much more important. Oh, look at that shit. Everyone's piling in, going 10x on the money. Do you have an appropriate position size? Is it at a premium or a discount? What is the overall portfolio composition you want to create? How does this asset that's highly appreciating fit into that portfolio? So there's so much more than just being excited or trying to find something that is going to outperform. Because if you buy something that's going to outperform, but it already has outperformed, that's what happens when you buy Solana at 108, it goes to 1,000, and the next cycle it crashes to 80. So literally, what's my expectation for Bitcoin? So Bitcoin's at 50K. Let's say it rips to 250, and the next cycle when Fed's hiking rates 6, 7, 8, 9% or doing whatever the hell it's doing, and it crashes to 60. I mean, it's literally what happened last cycle. Went to 70 and it literally crashed to 15, which is marginally 20, 30% below previous 2018 all-time highs. So that wouldn't be weird. That would make a lot of sense. Now, are you buying Bitcoin now at a premium or a discount? It's certainly at a premium. Bitcoin was 15,000 and it's 50,000. Someone bought it and is up 300+%. And sure, it could keep running to $250,000, which is a 5x for you, but that 5x is 15x on the money from the lows. So someone made 15x, you made 5x, and that Bitcoin crashes to 60K, and everyone's freaking out trying to understand what the hell it's doing, and we're talking about it now. Probably 2 years early, talking about the lows, and this is why I often say I'm much more interested in where the lows will be, because that defines the structure of the market. And you also accept when you're looking at the lows that the highs are bullshit. The highs mean nothing. The highs are exuberance, insanity, desperation, whatever. It's not real. It's fluff. And that's why I said earlier, when the market ends up doing that gross stuff, you end up donating money because you just feel gross of how many multiples you're making. So that's where we are. And then I could never give this advice to my younger self, but that's why I do the stream, I guess, so I can hopefully share these thoughts with folks, and their first trip will be better. And then this, it usually takes about 3 cycles to figure out how to navigate these markets. The first cycle, you have no idea what you're doing, and you're lucky if you don't lose everything. Second cycle, you're like, all right, game plan, and you make some money, and then you round trip it. And if you're lucky, you round trip it, and you've retained a fair amount of capital, a nice base of working capital. And then your third cycle is like, all right, I just round trip my shit, and now you're going to get the gross multiples, except now you have a sustainable methodology and this rigorous plan of action on how to continue to engage with these cycles, the psychology necessary to survive this cyclicality, and you have something that's sustainable. You have capital that's just allocated to spot liquid positions, and you liquidate and you ride the maximum multiples, or you think like a dividend investor like myself, like a business owner, and you want to own things that produce cash flow. Whatever it is, whatever your sustainable methodology is fine. Just set reasonable expectations. Now, that's all that matters. Reasonable expectations. Yeah, any options protocols? No, but I like perps and stuff, perp dexes. I missed that GMX early. Wish I had GMX early. But I did get an early bid on Parify on Arbitrum. So here's the Sablier stream, and this is from Fjord Foundry. LBPs. So you can get some early stuff. This is where folks raise capital, and obviously this doesn't go through a particular jurisdiction. There's no disclosures, and you know, it's just the market proves itself. If something hits, it hits. So Fjord Foundry at times has something that's interesting. Someone's raising capital. So I took a piece of Parify. I cannot say anything more than that. I don't know. But that's what this protocol allows you to do. Allows people to raise capital formation. And here, I'll get you the at. It's Parify. At Parify. Parifi. And that's on Arbitrum. I don't know. I think there's room for more perps. IntentX is hot, very interesting. Follow the money. So we go over to DeFi Llama to follow the money, and frankly, the money's going to be on Arbitrum and Solana. So if anything new is coming out, Solana, PepperDex, Hero Network. So it's just off the beaten path because literally the gas token is taking the spotlight on Solana, which is so weird. But at some point, the perp dexes are meaningful. And where does that fit into my inspection of a market? It's money, credit, it's foreign exchange, and derivatives. So perp dexes are the derivative component of a financial system. Simple as that. What's your opinion on Eigenlayer? It's a big deal. Restaking. My opinion is Fractal is going to be wild. That's my expectation. And I wouldn't be surprised to be disappointed because how many times have we been disappointed before? But my expectation is it's going to be very exciting. Now, Eigenlayer fits into the same category as just incentives. And that's all it is. It's just incentivizing behavior. And if you can incentivize engaging with block space and deploying contracts, you're not only incentivizing users, you're incentivizing developers. And now you're building. If you build it, they will come. But you need to incentivize people to build it for them to come. And that's why this new, it's not points, this is incentivizing interacting with the chain. I think this is something new and very interesting. So Eigenlayer is very interesting. A lot of the stuff that's going on Cosmos Hubs is very interesting, and certainly Fractal coming very soon is most interesting to myself. will you speculate the future of DeFi on BTC base layer and how that might affect ETH TVL? Thank you, Cap. Yeah, well, not on base layer. You can't do anything on layer 1 Bitcoin, but you could do countless things on layer 2 Bitcoin. We've been talking about this for years. I mean, layer 2 Bitcoin is EVM. There's literally all the shit that people do on Ethereum, on Arbitrum, on Optimism, you do on Bitcoin. It's just that chicken and the egg. Roblox is literally is optimism on Bitcoin, and nobody talks about it. It's optimism has a deploy using secured by Bitcoin's hash rate. Oh my God! So obviously rootstock and stacks. Stacks is the hot narrative. I don't know why. I don't know why they didn't go down the EVM route. But rootstock is pure EVM, and that's Bitcoin. So Bitcoin has Ethereum virtual machine, just like you would interact. You connect MetaMask, you connect, Frame, Rabby, what have you, and you have a bridge. There's a lot of bridges. You can bridge capital over to Roblox, but there's less activities. What's the activity? Credit, foreign exchange, and derivatives. That's everywhere you look in these markets, it's the same thing over and over and over again. Because that's all the products and services you can make. They're financial products and services. So you might have a different name, and you might have a different level of FOMO, but it's all the same shit over and over again. Hope that helps. Yeah, a couple streams ago you mentioned Flutter. Can you expand on why it's worth learning if you're looking to build UIs? Well, Flutter is seamless cross-platform from Android to iOS, and you build using Dart, and it's very interesting language. The language is very akin to like a hybrid between Java and Kotlin. So it has a great deal of productive capacity knowing one language. That if you obviously want to code pure native on Android, you need to know Kotlin, and then on iOS you need to know Swift. But obviously Python and everything that's going on chain, Solidity, Viper, those are all meaningful languages. But Flutter gives you a great deal of capacity. So it's a complicated thing with regard to being a software dev, because going to a school means shit. It doesn't mean anything. It'll teach you maybe something, but you can learn all that stuff using Google. And you can learn all that stuff on YouTube, so you don't need to go to school to be a programmer. So the whole thing about being a programmer is you need a resume, and school doesn't really do anything on a resume anymore. It didn't do it when I was younger. So what you need is a portfolio, just like an artist. So if you're interested in being a software dev, like if you think you have to think from the hiring manager's perspective. They don't give a shit where you went to school. They care about how productive you can be. So you have to prove your productive capacity, which means you have to show applications. So if you don't have previous work history, you got to show, oh, this application was downloaded 100,000 times, generated $25,000 in revenue, had this many users, was providing customer service, did this and this framework, this and this architectural implementation, and that's how you build a resume. You got to show your productive capacity in the absence of school, in which case school doesn't show any productive capacity whatsoever. All school does is show that you finished what you started. So, there's a whole lot of experience I wish I could just dump into the brains of my children that are going to be going down this road, and it's an interesting road getting to a point where you actually are able to extract something meaningful from society financially, understanding how it works, why it works. And that's why crypto is so fascinating, because we're dealing with incentive systems. It's everything in society reduces to an incentive system. Everything. In fact, every behavior, every human action taken, you can find an incentive. Someone goes to a restaurant, they're incentivized to eat, because if they don't eat, they're dead. I mean, that's a little rough and cut, but that's the truth. That's the incentive there. You want to live. You take a breath because you want to live. You get up and go to work because you need money, because you want to eat, because you want to live. Or You go to work because you want money, because you want to go on vacation, because you don't want to be depressed in life. So you want to go on vacation. So there's everything reduces to an incentive. Fascinating psychology. Any thoughts on how engaging in financial speculation is really the only way for the average demographic of person can bridge class wealth gap? Very much indicator of the current state of things. Yeah, the current state of society is a calamity. There is almost 0% chance of climbing a corporate ladder to a path that will meet your expectations. You'll get to the top of the pay grade, and if you don't have capital and you don't already own your home, you're just going to be struggling, and you'll never make it. So investments are the only way to do it. I mean, you still have the original path that everyone teaches: go to school, be a doctor. But it's getting into very complicated territory. For instance, general practitioner. In 10, 15 years, by the time you're done with medical school, the concept of general practitioner might not be the same, obviously with AI. But what is always valuable, for instance, is experience, even with AI. So AI cannot replace experience. So the veteran, but you can't be taught to be a veteran. So it introduces a great deal of complexity with how things are going and how you want to think when you're young or when you're a parent, because you're thinking of your kids being young, with regard to how the world is changing and what they do in school. It's not a simple equation. It's changing in very dramatic ways. And I don't know what's going to play out with the money. I mean, look at what's going on with crypto markets. Look what's going on with the monies, the dollar. You could certainly not save dollars in a bank account. If you save $100,000 a year and you have $1 million in 10 years, and you do that for 50 years, you have $5 million. And in 50 years, what's $5 million? You're probably not even going to be able to buy a house. So it's getting really weird. And that's if you save $100,000 a year. And nobody is saving $100,000 a year. Zero. I mean, obviously the minority. But the vast majority of folks, 40% of the U.S. population, doesn't have $1,000 in their bank account, which is why we have this rampant gambling and degenerate speculation, because there is no alternative to ever, ever, ever retire or get ahead. It's just quantitative at this point. So I'm concerned because all of that, Eris, leads to social instability, civil unrest. That's the destination. How much of a premium do you think will be put on this market in the coming bull run? The premium is going to be absolutely disgusting. I think, given the state of society, given the construct of the economic construct that we find ourselves currently in for fiscal year 2024, with what Treasury has to reissue and refinance, and the deficit spending for fiscal 24, I think this is going to be you're going to see larger premiums than we've ever seen. And that's between 24 and 25. I think it's going to be gross. It's going to be like, you're going to feel gross by the time it's done. And the whole art of the interaction is how to make that sustainable and capitalize. And that's, as I said, it takes about 3 cycles to figure it out. And 3 cycles, you're talking about a decade. If you don't, the first cycle, most people lose everything. And then the second cycle, hopefully you make something. And then the third cycle, you figure out why you made something and you figure out how to keep it. Anywho, I hope that helps. It's not easy, but we'll continue to talk about it, and hopefully more folks rather than less will navigate these markets successfully and come out with something to talk about, a success. Do you expect curve will ever show a lower low than today? Also, what should it be next cycle's bottom? These are interesting questions. Lower lows are fascinating, especially coming out of these multi-year trends. What would it take to produce a lower low? I don't think there's enough liquidity to produce a lower low. There is not enough of the assets, CRV tokens, in possession of persons that can and even want to sell to produce a lower low. That is my general sense, and that is by definition a bottom formation. Now, clearly, it's underperforming everything, and that could mean something, and that could also mean nothing. Curve could do crazy multiples in an irrationally exuberant environment. And everyone's like, what the hell is going on? Yeah, because it's illiquid. It's relatively illiquid. And sure, there's a fair amount of emissions on a daily basis, millions of dollars, but it's completely illiquid. And look at all the utility. You have a capacity to collateralize it. You have a capacity to the demand for it by the third-party protocols that are recycling and sterilizing excess supply. There's just a constant demand. So once that supply and demand get into the opposing balance, that's when you'll have significant outperformance, and that's exactly what we saw back here. So take this perspective. This outperformance occurred while the emissions were much higher. This outperformance occurred when there was no convex and there was no. How many protocols are sterilizing curve supply at this point? It's a lot, like a dozen that are just deterministically sucking circulating supply out of the market. So, and that was the outperformance. It went from 30 cents to $7. So that's how crazy the numbers get. And that's probably where my mental state is. And I don't want to set my expectation ridiculously high. But these numbers can get gross. And how many folks on the timeline post charts like this? And it's like the previous all-time high was 7. And it's like, all right, 35, 40. But my expectation, I set it somewhere reasonable, like $3. But I also understand how gross these markets get. And I understand this condition right here that puts us at 51 cents is absolutely nothing like this condition back here in November of 2020, years ago. It's a different world, a different market, completely different conditions. So I hope that helps. Next cycle bottom. Look at Bitcoin. The next cycle bottom, everything crashes to $5. Goes up to 30, crashes to 5. Bitcoin 250 crashes to 70. Crashes to 60. Marginally below the previous all-time high, which is, look at this green line right here. Marginally below the previous all-time high. So that's generally what we've seen historically, and history doesn't repeat, but it often rhymes. But that's where my mindset is at. That would make sense. You're very welcome, Eris. Athletic Concept. Rolex is really cool. Pegasus Protocol has no money over there yet. Once the FOMO hits, it'll light up and stuff. Chicken and the egg. But Rolex is literally optimism on Bitcoin. It's really as simple as that. And it's the evolution of Syscoin, which is a protocol dating back a decade. Was it 2014, 15, 16? I mean, it's literally been in development a long time. But there's no capital. So follow the money. You have to be careful, and that's why you have speculative positions. That's why you do XYZ to do cash flow. But just because something doesn't make revenue doesn't mean you don't have the speculation, and the speculation is substantiated. So that's why I've speculated on this since like 2018. I think I've had it that long. It's been 6 years at this point. Jesus Christ! But that's the time it takes for systems to prove themselves. Follow the money, though. So here, we'll take a look at stables real quick. Positive sum environment across the broader crypto space. Ethereum positive 1.3%, $70 billion. Solana $2.28 billion, positive sum, 0.87%. Arbitrum $2.2 billion, positive sum, 3.82%. Now you can take a look at the smaller markets. Optimism, $600 million. It's a fraction of the size of even Arbitrum or Solana, which themselves are a mere fraction of the size of Ethereum. Polygon as well is $1.37 billion, small stuff. $1 billion, small stuff. Phantom, microscopic, 392. Base, less than that, 313. And you don't even want to go into Cosmos hubs. That stuff is small. 133. Just follow the money. This is where the activity will be. This is where the outperformance will be, and you could get multiples surely on the smaller chains, but the worst circulating counter narrative is folks that respond poorly to gas prices. So it's expensive. Yeah, that's where the money's going to operate. So what does that mean for a smaller portfolio? Less transactions. Okay, that's a good thing. If you're engaging with a cheaper chain because it's cheaper transactions, you're doing way too many transactions. You should be doing buying 4 things a year. You take 4 positions, 2 positions a year. And claiming, sure, it'll be expensive. Claim once or twice a year. Let it accumulate. Engage with protocols to be efficient. Don't waste money. Do auto compounding, so on and so forth, so you could claim once a year. And that's how you manage. You don't complain about something that is a burden. You deal with it constructively. And you follow the damn money. Wrap it up in a couple minutes over here. How can rates increase over time if debt is so big and increasing? Wouldn't it make payments on it way too big? Yeah, that's why even the president has mentioned the world will not look the same in 4 years. It's getting towards very precarious times with regard to the currency. But in my mind, my expectations, it will last longer than people think. People think it comes to an end. All right, see you next cycle in 4 years, and rates are 6, 7, 8%, and debt to GDP is like, how the hell are they going to pay for this? And they're paying interest on the debt of $1.5, $2 trillion a year, and inflation's running hot, and tax receipts have doubled. And it just gets weird. And this is why I said all of this leads to social unrest. And maybe it's not inflation in the real economy, and they were able to somehow cool real estate and cool the price of goods and services, but you have a disparity with the stock market and the financial economy. So the financial economy is not the real economy. So if you have the great inflation isolated to the financial economy, what you have is the real economy, and there's little to no inflation. Everything is finally stabilized. Let's say there's a 0.5%, 1% inflation, and now they're back to like 2010 to 2020, where they couldn't get inflation off the ground. And now the financial economy is experiencing rampant inflation. Like stock market, S&P triples, quadruples, and it's just gross, and that's where they're getting their tax receipts from. So they need inflation somewhere, and it just so happens that the real economy is not politically palatable. So the real economy, that would all make sense with regard to what they would want to see. So it'll be interesting, and we'll be here to see it. Can you explain the concept of foreign fiat being pegged to the U.S. dollar? Well, that's what, frankly, the dollar is, albeit it's collateralized in dollar-denominated instruments. The problem is the volatility at this point in the market value of those dollar-denominated instruments. Now, the vast majority of dollars are collateralized by U.S. debt. So the U.S. debt is ultimately the value of the dollar. It's what collateralizes the value of the dollar. Now, pegged is another story because pegs need to be managed. Now, obviously, there's a lot of currencies out there, foreign fiat, that are pegged to a dollar. The Hong Kong dollar is pegged to a dollar. Now, that requires a balance, a trade balance, import, export, and like they need to be profitable and have available capital in foreign denomination to be able to support the peg. It's a managed operation. And it's difficult because you're dealing with analog systems, you're dealing with actual trade of physical goods and natural resources and energy products, and you're dealing with just international trade of at the individual level and all that capital flow. So it's not so easy for the nation states to do it, but it's a very different world when you're talking about these crypto protocols that are managed by software that don't have people and it's deterministic, and you're talking about collateral that is responded to price-wise in real time. And you're able to liquidate instantaneously and do a variety of different on-chain activities responding to manage the peg, block by block. That's crazy. So that's what these systems mean. It's an evolution, an iteration on shit that nation states have done for years and have tried to do in the most horrible way, in an analog way, and they're deprecated at this point. And then these smart contracts just make what nation states do seem inferior, because they are inferior. So I'll end on this note. What's most interesting is when you're talking about protocols, the protocols that we have interest in, not talking about the gas tokens, because that's respective of a particular market. So my point being, when you're talking about a protocol like Frax or Convex or Curve or I do look at a lot of gas tokens, I guess, but pick a protocol that's a contract. That has nothing to do with the network. Curve is not an Ethereum protocol. Curve is an EVM protocol that could exist on any chain. Any chain that supports the EVM virtual machine, Ethereum virtual machine, can run Curve. So it has nothing to do with the Ethereum network. I'm not an Ethereum maximalist. I find the monetary policy very interesting, and it seems to be doing very well, up 2.72%, still underperforming Bitcoin that is over 50. Oh, oh man, the timeline is so quiet for pushing things over 50. Crazy. Anywho, we'll keep doing this, and we will figure out how to be sustainable in these hyper volatile markets. And 3 cycles. Take your time, and respect the size of the portfolio, and try and learn something and do things different than most, because most people do not make it out with anything. So be the minority. Hope that helps everybody. Monday, February 12th at 12:28 p.m. I wish you all a good day. Tell everyone to subscribe. Link in the description for the most rational community in the entire crypto space. I will see you guys later this week.